Hi guys, how you going? You've got Trader Riz here, coming to you today on the 3rd of April 2014. Look, I've got a special offer for you guys. It's a yearly forecast of the currency markets, the gold markets, and the equity markets. So regardless of what market you're in, and even if you're in the commodity markets, we can do something along those lines as well. So what I wanted to show you today though, what I first wanted to show you was how well was my forecast for 2013. So let me ask you this. What do you think you could do with information that tells you almost to the pip where the markets are going for 2014? And to give you an indication of what I mean by that and what the benefit of that is, let me just show you what was my forecast for 2013. Because I've got a forecast for 2014, but I first want to show you how well my forecast performed in 2013, so you have an indication of exactly how powerful this methodology is. So what I've got here on the chart is basically a monthly chart of gold. So each one of these bars is 1 month of gold. Now what I've basically got here, this box, I've boxed in what was 2013. So these lines, everything that you see on the chart, including this box down here, I had already drawn that in over here at the beginning of 2013, right? So these lines that you're essentially seeing were my forecast for 2013. And this is a monthly chart. So I'll show you the forecast on a monthly chart, I'll show it to you on a weekly chart, and I'll show it to you on a daily chart. But basically what you've got to imagine is that we were something like, we were something like that, right? Something like that. So just, how do I bring it back over this way? Yeah, just before that box, we were somewhere here, right? This is where we were at 2013. And so all those lines that I've drawn, they were already drawn in. So this pitchfork, if I bring it over a bit, this pitchfork was basically based off that high over there, that low, and that high. And the sliding parallels were then basically based off the gradient of that pitchfork. So I had essentially drawn this in, and I had identified that there was a gap up here. And so we had identified that, okay, there's support down here, the support down here, that's where we started. There was a bit of resistance over here, which was then support over there. You know, there's a bit of support along here as well. There's support along here, and there's resistance up along there. And essentially what the key telling feature was this gap, where it didn't, you know, where you've pushed high, you've driven back lower, you've pushed high, made what was pretty much double tops, you've driven back down, you're trying to push high up into new highs, you don't get there, you don't even get to where we previously had that resistance. You might have got there on the horizontal, but that's not what I look at. I look at these angled lines, and that's what gives me an edge in the market. So you didn't get there on the angled line. So that momentum, all of that momentum that we've had, you know, in this drive up, and in this one, it's just struggling, it doesn't get there, and now starting to come back down. That was an indication that we are looking to go lower. And what I said at that point was, okay, you know, see if there's support there, but we may well break through there because we've got this gap, here. But then look for resistance underneath it and look to go short over there if we see resistance underneath it. Then we can look for targets down here or even down here. And we can start to sort of look for longs again, maybe down here, down here, down here, or along this bottom line down here. And then I drew in some Fibonacci's, and that's how I got that box. So let's just see what happened. Let's have a look at what happened. So I said that because of this gap, look for resistance along this line, and that's exactly what we got here, right? So now I can draw in that, because that's exactly what we got here, resistance. And I said look to short that, and I said you can take your targets there or there, and then I said look, you could look to sort of long this line, and look at that, I bounced exactly off that line. And where do you think it's going to end? Well, here was a previous support, and it stopped right on the pip over there, comes back down and goes lower. Now let's talk about this box. Exactly how did I get this box here? Okay, if we draw a few Fibonacci's, let's draw some fibs from here to here. And let's also draw some. So we know the bottom of that is 0.6, but let's also, then I went, okay, I said I'll draw it also from say around about here, right? Then what I said is that, okay, let's grab ourselves this and let's aim for somewhere to the 0.7. Let's have a look at that. Yes, no, yes, no, maybe. Let's have a look at an extension from here down to here, up to here. So the 1.27, the 1.618 sort of comes in between there, right? So, you know, if we're gonna go exactly an A, B, C, D, you'd be looking there. But if you're looking at the extensions, you've got the 1.27 extension coming in there. You've got the 1.618 extension coming in there, which is pretty much the high and lows of that box. And I then would probably move this up to sort of around about the 0.618 over there. Let's have a look at that. And that's where I would have, you know, pretty much predicted the low, which is just at the top of that line, just at the top of that box. That's where I was looking to sort of go along, just at the top of that box, but I didn't want it to go below the box. So maybe my stops were somewhere below the box. When the time comes, I actually go in and I trade it, you know, off a daily or a 4 hourly, but this was the yearly indication of how I got that box. So let me just delete these off here now. And I can delete this one, and I'll delete these fibs as well. So essentially, these box was based on a number of confluence lines on your Fibonacci's, and also some confluence lines on the extensions of the ABC, and also then a Gartley pattern coming in around about that level. So I would have, you know, expected the market to stop about there at the top of that, but take a look at what happened. It went a bit below that, you know, well, significantly below that, but then there's support along here, right? So if I just put in the green there, there's support along here, right? So that's the next support level. Now remember, these are all support levels, so if there's not support there, it's there, or there, or there, or there. This line didn't play out so well, but take a look at that. That's right to the pip, guys. That is right to the pip. And you know, realistically speaking, once you would have had this sort of low in over here, you probably would have drawn that and said, okay, when it comes back down to here, that's when I'll go long, right? And once you would have had, you know, this high in up here, you probably would have drawn that, right? You probably would have drawn that at that point and said, okay, you know, there's that high there. So it's about picking the frequency. And then once things happen, you then extend those lines on further, right? And look at this. Look at this. I'm just going to focus in a bit more here. Take a look at this. To the pip. Take a look at this. To the pip, right? So we touched that to the pip. We touched that to the pip. We touched that to the pip, right? This one you would not have got, but once you extended it, you would have got that one, right? This one you would have got because this one was in play, and then you would have extended it from there and you would have got that one there, right? And this one probably may have been targets because these were based back there, but this was the big one, right? And that was based from there. So that's the power of this market analysis, right? Of this yearly forecast. And I've got a 2012 yearly forecast for you. But just before we take a look at the 2012 yearly forecast, let's just go down to a weekly chart of the 2013 yearly forecast, and let's see what I was telling you there. Okay guys, so I've brought up now the weekly charts of gold. So each one of these bars is 1 week, and essentially I've rolled it so that, you know, 2013, whoops, I hate when my chart does that, so that 2013 hasn't really started. I've got a box drawn around 2013, and we'll talk about what happened. But at that point of time, you know, we were probably somewhere here, and this is what we've seen. And I had drawn in basically this pitchfork here, and I'd extended it, you know, along those lines, and then I extended it back as well. It's like, okay, look, there's lines there and there's lines there. And I'd basically identified the support and resistance areas, saying, okay, support, resistance, support. That resistance then became support, drove up to new highs, resistance, 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 and, you know, bullish markets that like to sort of break those levels, so then it drove up to new highs, and that became resistance. Then what was resistance before became support, up there, which was a lower high, down to the previous support level again, up to the previous resistance level again, and this was then starting to make sort of a higher support. Then it sort of broke up just above that again, but that was a false one, which was indicated by it coming down and respecting that again there, and then lower we were looking to go. And basically what I said at the time was that look for support here, and if it goes below there, then look for resistance, look for that line to be resistance. So basically look to play this line for support or resistance. Similarly down here, look for support there, or look for support there. Look to play it along those ways. And then I drew those scenarios in. But let's just take a look at what happened. So look at that. I mean, that's almost picture perfect, right? I said look to play this line if it breaks through it as resistance. It broke through it and it came back up, touched it 1, 2, 3 times basically, right? It played as beautiful resistance, and you could have shorted off that line, and that's basically what the recommendation was, to short off that line. And your targets are usually to the next line, so that's where we hit the target there, right? And then from there you could, you know, if it played nicely, you'd look for look for, whoops, cat's got my tongue, you'd look for a long. And look at this, to the pip, right? I drew this line in back from here, right? Back from these sort of, you know, January 2011 lows, right? This is the power of this methodology, right? And I picked the exact top. And where do you think it's gonna go? You probably may have got out there, but look at that, right to the pip again, to these lines, right? And then look at that support, right? And at this point, right, at this point you can start to draw in some more lines, right? So I probably would have drawn in something like that, based on that support there, that resistance there. Well, the objective would be to pick that top there, and look at that, almost to the pip, right? And then it goes lower, and now it's making sort of, it didn't get to this low, it came back up, and it's finding support there. And you know, 2014, that's what we're going to talk about moving forward. But look at the 2013 forecast, and let me just show you something. Let me show you a little trick. I'm just going to draw a line and get the width of this pitchfork that I've drawn. I'm just going to turn off the extension for that one a bit. Just going to make this a bit bigger so you guys can see. Oops. So I've taken the width of this pitchfork, right? And essentially it's the length of that swing there. You know, it's almost the length of that swing there, so it's bigger than that swing. And it's, you know, it's basically identifying what I feel is the length of the swings based on this pitchfork, what is part of the personality of this current gold market. Take a look at this. I'm going to put that there because once we went down and we came back up and we started going down, where do we think it's going to go, right? Well, that's the predicted length, around about there. Look at that, right? We're looking at 12.10 and it bottomed out at sort of 11.80. On a monthly chart, that's beautiful. You take your profits at 12.10 after you've gone short up here at, you know, what's that, around about the 14.85 area, and you take your profits at 12.10, you're not going to care that you didn't get these other pips. That's perfect. And if you want to get real pedantic about it, right, even if you were to put it below that, right, then you look at sort of the bottom of that and you say, okay, you know, somewhere you'd box it in and say, okay, somewhere there is the low, and then you know, go on a lower time frame and look for something that looks like support, and you'd get out on the first sign of that to sort of fine tune it. But that's the power of this methodology on the basically the weekly charts, and that's the forecast that I had for 2013. And you know, quickly going over it again, I picked the top there, I picked that low there, I picked this low here, right? I came back up and I picked that top there, I picked that low, I picked that top, right? And then coming back up here into 2014, I've again picked that top there, right? So I'm picking these swings to the pip, right? I'm picking these swings exactly to the pip. And when you put in, you know, the monthly analysis with the weekly analysis with the daily analysis, and when you start to take these charts down to 4 hourlies, 1 hourlies, and 20 minutes, this really becomes a very powerful system. And so what I'm looking to give you guys is my forecast now for the year of 2014, right? So I'm showing you how good the forecast worked in 2013, but what I'm really offering you is that same forecast for 2014. But just before I do that, let's look at how good the 2013 forecast worked for on a daily chart. Okay guys, I've brought up a daily chart of gold now. So basically each one of these bars is 1 day of gold, and just gonna show you basically what we were looking at sort of early 2013 when we were doing our 2013 forecast. So this is basically what we could see. Again, we were probably around about here, right? Because there's the box that I've drawn in coming up over there. So probably around about here. So just bringing it down. So just bringing it into perspective, we had those highs, we went down, you know, we break this support level here, we found support down here, had a nice little sort of medium line there that was, you know, sort of support, resistance, support. We had then these highs up here, went back down there, respected what was the support levels down there, went up, you know, started to find a bit of support, broke above that, but then came back lower, and again found support here and resistance there. So this median line is acting really nicely for support and resistance. We went down and we made sort of higher lows, so they were down there, these ones are here, and then these ones were here. So we started making higher lows, so we'd expect a breakout above this fork, and that's what we started getting up here, and then it was up around here, where we started it to sort of come back down, and we started seeing, you know, lower sort of lows over here. So at that point of time, we hadn't broken those highs up there. We'd seen that gap on the monthly charts, and so essentially what we were saying was I could look for support there, or there, or there, or there, or there. And we were also saying that, you know, if you find it pushing up from the underside of any of these lines, then look to short those lines down for targets at the next support line. So let's take a look at how we did. Okay, so take a look at that. Let's just start from over here. Look at that, right? We go down and we start to find it touching the upper side of that line. So what did I say? If it touches it from below, it's going to act as resistance. And that's exactly what it did. Whoops, come on, up you get. And that's exactly what it did. So you would have got short there. Targets at the next line, you would have got out there. That would have been absolutely perfect. At that point of time, you would have extended this line here, right? And you wouldn't have got that one because that's where you're extending from. But over here, once you've seen this touching the lower line, especially that one there, you would have taken a short again with targets at this next line. So you would have taken that short over here with targets, and well, targets may not have been at that line, because what you could have done also is extended it from here and said, okay, that's my targets down here. Right, so you would have basically taken those shorts, and you could have even just taken your targets, your small targets down there. But then it comes back up, and you may or may not have taken that as it starts to find resistance now a little bit lower. If you actually zoom right in there, I might just zoom right in there and show you something. If we actually zoom right in there, if you were actually right on the ball, what you could have done, see those support lines just below that? See this support here? I'm drawing this line based on these support lines here, right? So just a little bit maybe high about there, right? Based on that, and look at that. You could have essentially picked that high there and gone short there if you wanted to, right? But you may or may not have got that. So let's not call that. But basically if you got that, you know, your targets would have been here or here or here. You wouldn't have waited to drive it all the way down there, right? You probably wouldn't have done that, realistically speaking. But what's interesting down here is that look at that. Look at how that is picking the low, right? Especially take a look at this one. That's picking the exact low, right? And once you got sort of this movement over here, instead of drawing another, I'm going to just take that one away. Once you got this movement over here and it's come back down here, you would have drawn this and you would have taken that short there, right? Let me now put some of these more. And you would have drawn this. Whoops, it's a very big line. Yeah, that's looking nice. So you would have drawn this at this point here, and you would have taken that short there, or you would have waited for it to close back below it and maybe taken this short here. And where would your targets be? Well, if not this line, then definitely this line, because this line didn't really play out, right? So this is the line that didn't really play out. But it's still picking that exact frequency of things, right? So then as we go, you know, it goes below, it then comes back up, and it starts to find support there again. Below, comes back up, starts to find, you know, a little bit of support just above that over there for targets right up there. Okay, so as I was saying, this line, you know, it hasn't really played out. So at that point, I would have moved it. You know, I would have either drawn another line or moved it, and I probably would have tried to catch of these three, you know, touch it on the third, on those three there, and see what that does. May or may not have helped over here, right? But look at that, to the pip, right? Look at that, to the pip. And even below it now, starting to come into play over here, to the pip. And at that point, you know, you could always draw in this line, maybe here, maybe here, over here. May or may not have got that, you know. But look at that, to the pip, right? And now, then after that's in 2014, which we'll talk about soon. But basically, that's the power of these lines. That's the power of this forecast. That, you know, to the pip, you're picking these moves to the pip. Look at these ones. These were beautiful, right? Down there, look at these ones. These were absolutely beautiful, right? After that, it sort of waged around a bit. But look at that. You could have got in that. That was absolutely beautiful for targets even down there, right? So that's the power of this forecast. That's the power of what this forecast and what it could have done for you in 2013. So this is now exactly what I'm going to do for you guys for the year of 2014. Now you cannot get this analysis anywhere else. Nobody's offering this. Will you find something similar to this? Yes, you may. But all the things that I take into account to draw in these, you know, it's not just these lines that you see on the chart. There's about 10 other things that I draw on the charts and I delete them before I work out the exact personality of that chart, right? Where that pitchfork really should be, how wide it should be, the angle that it should be on, and the extended lines where they should go and whatnot. And I really read the markets. So, you know, as I've said before, I've learned from 3 sovereign fund managers, and they each had different personalities and different ways of trading. What I've now done, I've taken a bit from each of them and I've put together my own personal system. And it's based on, you know, these Andrews pitchforks, these trend lines. It doesn't use any magic indicator. Get out of this thinking of indicators. Get out of this thinking of EMA lines. None of that stuff works. It's all delayed. It's all just within the price, right? Get out of all that thinking. You've got to be able to read inside the markets. You've got to look at the markets and see how they're reacting, right? And that's what this methodology does. It takes into account the swings. It takes into account, you know, trending versus range. You know, it also takes market cycles into account, you know, the time frame into account, you know, the volatility of the market, and, you know, also Fibonacci levels, you know, just normal horizontal support and resistance, angled support and resistance. There's so many things that this methodology takes into place. But anyway, without getting into all of that, this is, you know, not about how I get to these lines. It's more about what the forecast can do for you guys. So anyway, if you think that that was helpful, if you think that you could have used that information in 2013, say if you think these lines could have been beneficial to you in 2013, then you definitely want to subscribe to my 2014 forecast by just putting your email in on this page. And based on that email, I'll send you out a link and you can get it immediately straight away. It's the forecast for 2014. All these lines have changed because at the end of every year, I delete all the lines and I start again, right? I delete the lines and I start completely again, a complete fresh chart, right? So if you want to see what that's like, and I'll basically talk through it. And even through the year, I start to, you know, highlight, look, this is what I'm looking to do now, this is where I'm going now, this is the type of trades I'm looking at, this is the direction I'm looking at, and I'll, you know, if you want to be involved in that, you can be involved in that as well. But right now, the key message that I'm trying to get out to you guys now is that this was the forecast for 2013. I've got another forecast for 2014. So if you think this could be useful, then put in your email and I'll send you out the forecast for 2014. Till then, good trading. Hi guys, you've got Trader Riz here. Coming to you with an exclusive free offer of giving you my market analysis forecast for the year ahead. I mean, let me just ask you a question. Whether you trade the currencies, the Aussie dollar, the euro, or whether you're trading gold or oil or the equity markets, whatever market you're in, imagine if you had a path, a vision, a complete roadmap for the year ahead, right? Imagine if you knew exactly where those markets were going to turn. What could you do with that type of information? Imagine if all you knew was direction. What could you do with that type of information? I mean, just imagine the possibilities. So that's what I'm here to now give. I'm basically looking to give anyone who enters their email address down below this video, I'm going to give you basically my forecast for the year ahead for the currency markets and the equity markets and the metals markets. So we'll basically be including the Aussie dollar, the euro, we'll include gold, we'll include, you know, the SPX index, and if there's something else that you really particularly want, we can look to include that as well. But basically, it's a complete roadmap for the year ahead. So take a look at this. For example, what I've got on the chart here, what you're seeing here is the Aussie dollar. It's a monthly chart of the Aussie dollar. So just to sort of let you know the quality of what this analysis is like. I mean, what could you have done if you knew that the market was going to turn there? So as I was saying, we've got here a monthly chart of the Aussie dollar. And I mean, just take a look at these, right? Take a look at this. So from there, we drew that line. From there, we drew that line. And so, I mean, imagine being able to pick that low there, right? That's only a few pips from the low. Imagine being able to then, you know, you wouldn't have got that high, but imagine then as it came back down to these previous lows, you would have maybe not have got that one, but you would have, what we would have done around there was probably draw something around about based on this low over here, right? And you probably would have got it over here. So then from there, imagine being able to sort of look at those highs there, right? Right to the pip, because we would have drew this line based on these highs over there. So imagine being able to get that high there, right? And then again, imagine being able to sort of get that high there. So that was based on this line over here. It goes higher, imagine being able to get that high over there. So we're picking these to the pip, right? We're picking these almost to the pip. And that's the objective, to give you guys basically a direction for the year ahead on these different currencies. So again, when we look at the more recent action from 2012 and onwards, I mean, look at these highs and then went lower and lower. Imagine being able to pick these highs over here in, you know, early sort of 2013, and then it came down and it's come back up here. So imagine being able to pick those highs there for a short down to here. And now where's it going, right? So imagine being able to pick that low over there. Now where's it going? Maybe up there, maybe higher, maybe lower, who knows? But that's what we're going to outline for you. That's the roadmap we're going to give you in this yearly forecast that I've got for you guys. So let's move on to a weekly chart. Let's look at the Aussie dollar on a weekly, right? So when I give you my forecast, I'm going to talk through each one of these time frames from a monthly down to a weekly, down to a daily, and maybe a 4 hourly if I think that's going to be of help, right? So again, look at these highs. You know, we're picking them to the pip. Look at this. Look at these highs. Okay, so we didn't get these ones, but, you know, we didn't enter that trade. Look at these lows. That was drawn after that was made, and even after that was made, right? So you could have basically took that low there. Look at these more recent ones, right? Look at these more recent ones just from sort of September last year. Look at that low there. Imagine being able to get into that, right? And then look at these very more recent ones where, you know, this line was drawn based on that low there, and all of these have got that same frequency, and I determined the frequency based on a priority method that I use. But essentially, you know, we would have tried a long there, we would have got stopped out, but the second time around when it came down after the flush, we would have got long there, right? So now look what's going to happen. So, and you know, we're going to give you a complete roadmap for the path ahead. So that's the weekly chart of the Aussie dollar. Let's take a look at the daily chart of the Aussie dollar, right? So even getting right into exactly what's happening now. I mean, this in itself is helpful to you guys. So imagine what the yearly roadmap's going to do. Imagine knowing that. Imagine that complementing your trading. I mean, just as we look at it, it's starting to, you know, bounce down just off those highs where we expect. But imagine being able to get in long down here. That's only pips away from the bottom. Again, imagine being able to get long there. Imagine taking this short up here, right? Imagine the small stop that you got to put to take these trades. Again, you know, imagine going short there, which was off that, and imagine going long there. Imagine going short at the top here, right? A complete roadmap for you as to where the Aussie dollar is headed in the year ahead, and not just the Aussie dollar. Let's take a look at some of the other currencies. Let's take a look at the euro dollar, right? So here's now a monthly chart of the euro dollar. Similarly, same thing. Look at these. Look how we've picked these. Look at this, you know, almost to the pip. Look how we've picked these lows almost to the pip, right? Whether you're trading off the monthlies, the weeklies, or the dailies, you know, it doesn't matter. We're giving you those charts. Here's a weekly now of the euro dollar, right? So look at these. Look at these lows over here. That low there never actually really breached the low down here. So you could have taken this over here and even put your stop sort of down there somewhere. And we'll talk about how to enter these, how to actually, you know, take some value out of this and how to learn from this more in the actual yearly forecast. And the yearly forecast is completely free, right? So when you enter the email address, I'll essentially send you a link to the yearly forecast for all these currencies. So imagine being able to get in there. Look at these highs up here, right to the pip, right to the pip. Imagine this low. Now where's it coming down? Well, maybe it's there, maybe it's there, maybe it's down there. But we'll talk more about that in the actual yearly forecast. Let's look at a daily of the euro dollar. So you're going to get all of this, right? So this is now a daily chart of the euro dollar, right? So I mean, imagine being able to see these. We've seen that was making highs there, and we've seen that it's now starting to make lower highs. So imagine taking that short there, right? And then coming down looking to long there, you probably wouldn't have got in and you probably would have lost. But you could have then looked to long there and you could have taken that trade, right? And then similarly, you know, what was support there, a flush, and then comes back to support over here. Imagine going long there, right? Similarly over here, right? We drew that line in, so imagine going long there. And your targets were where they were before, right? Then it breaks up above that, and okay, now you've got new targets over here. And you've got these lows here. So imagine taking that low there and putting your targets over there, right? Then it comes back down to where we were before. So look at the frequency of these markets. You know, it breaks that, comes back down, and where do you know the highs are going to be? Where's it going to top out? Well, imagine taking that short right there, right? Then it breaks down lower. So where do we think it's going to go? Maybe there, maybe there, maybe there. That's more to be spoken about in the yearly forecast that I've got for you guys. And to obtain that, all you need to do is put in your email address in the field below this video, and I'll send you the link to the yearly forecast for all of these currencies and more. So now, what if you're not trading currencies and you're more into gold? Well, let's take a look at gold. This to you may be a very simplified chart, but there's a lot that goes into this chart. There's a lot of lines I draw, and then I delete those lines so that it looks simplified at the end of the day. But look at the frequency that I've captured. It's all about knowing how to capture that frequency. And look at the frequency that I've captured here, right? Look at this momentum. So, you know, that was support, which is now resistance. And imagine this was only, you know, sort of a week or so ago, these highs over here. Imagine being able to short that high there. And the targets, you know, knowing that, okay, your targets are sort of around about down here. And even when it comes down here, maybe that's a good long, right? So let's look at a weekly of gold. This is now a weekly chart of gold, now of spot gold. So you know, let me just bring these down a little bit here so you can first just move back a bit. Look at these highs, right? That was a flush and you would have got stopped out, but as it came back again, you probably would have got it there, right? Almost to the pip. Look at these lows, there. Look at these, look how many opportunities you had in to get it long there. And it went up and, you know, it didn't quite make it to the top, and that's a signal that we're probably going to now break lower, and that's exactly what we did, right? We made higher, you know, lower highs, which was then support over here, starts acting as resistance over there on my priority lines. And let's have a look at where we are now, right? So it's coming down to here. So look at this. We drew this line. Once this low was in, that's when we drew this line. So imagine being going long there, right? And if you got stopped out, the second time it touched it, imagine going long again there, right? For targets up around here, right? Imagine now when it comes back down going long there, right? Or wherever that may be. And we'll talk again more about exactly how to enter on these and how to use this roadmap for the year ahead. Imagine what this information is going to do for you, a complete roadmap of exactly where the market can bounce off the monthlies, off the weeklies, off the dailies. Imagine what that's going to do to your trading. I mean, you know, everyone's got a different personality, everyone's got a different way that they trade, and what works for me may not work exactly for you, but this is such a strategy that it can complement your trading. Before you look to maybe trade your own strategy, this can complement that. It's giving you direction, it's giving you vision, it's giving you a roadmap for that market ahead, right? So let's move on and look at the daily charts for gold. So I've brought up what is a daily chart for gold, and I mean, let me just sort of bring this into action. You know, imagine going long there and looking to sort of short it there, right? And then we broke lower, and then we sort of had that as the next possible long. And as we came over here, you know, we didn't get much of a bounce, it went even lower. But then imagine, you know, you get that, and then, so imagine coming long as it comes back down again, right? So you get stopped out there, you go get a little bit of profit, and you're probably back in break even by then. You get stopped out, but you're still looking, if it regains this line, you're looking to basically long it again. And you essentially could have taken a long there as well if you were, you know, that type of a risk player. But here it is, it regains the line, so now you're looking to long again. You could have long there, and if it touches again, you can long there, right? Stops are probably down here, and other people, the stops are probably down over here, just depending on what your risk profile is. But take a look at that. You had a chance to get in there, and where do we think we're headed? You know, maybe up there, maybe somewhere between here. Let's take a look, right? Look at that, to the pip, right? Take a look at that, right to the pip. I mean, we had these lines drawn back here. These are It's the way we pick the frequency, and there's not many people that can do this out there. And you know, I've been taught from 3 excellent fund managers that each had different styles, and based on that, I've now developed my own priority technique. And you know, I can't even say their names because of the sovereign funds that they trade. And essentially, that's why I'm able to now pick these to the pip, right? I'm picking these to the pip, and I'm willing to basically give you all of this, to show you all of this in a complete 12-month or a complete, you know, till the end of the year path roadmap of where these markets are headed. So look at what we're looking at now. Whoops, it just popped up over there, but I've even drawn in, okay, that was, you know, support back there, and when that market sort of comes back down to here, that's where we're going to look for. We're going to look to go long over here. So I'm telling you that immediately now, straight away. That's what I'm looking to do. Maybe that's not right for you, but that's what I'm looking to do based on the frequency that I've captured in this market, right? And we can do this potentially basically on any instrument there is. So let's take a look at, you know, for those of you that don't even trade currencies, that trade maybe equities, let's take a look at this for equities, right? And I can tell you there's not many people that do this approach on the equity markets, and that's what really gives us an edge. But take a look at this. This is a monthly chart of, you know, the SPX. Imagine capturing that low there, you know, imagine knowing from there that, okay, it's probably going to stop out here and that being your target. And then, you know, you see a bit of support there, and then knowing, okay, you know, I could short it there, but then I'm going to look to basically long it there based on sort of this support back there, right? So now where are we? Now imagine, you know, when it goes up here a little bit maybe higher, to short it there. Or even when it goes lower, you could try along there, or you could try along down here, and then maybe down here, then maybe down here. But imagine having this information. Imagine knowing exactly where you expect the market to turn, right? Let's take a look at the weekly chart of the SPX. Now look at the frequency that I've captured here. This is absolutely amazing. I mean, look at that, you know, a flush there, but then a long there, right? A flush there, and you probably would have got out, you know, around about here, right? You wouldn't have taken it all the way up there. You probably would have got out around about here, right? But then you get this high and you draw in a frequency line over there. And what do you know? You get a flush there and you look to go along here, and you're looking for your targets there. And you could even take a small short there if you wanted to, right? But look at the frequency. Look, we've got it, you know, to the pip. I mean, there's not many people that can nail it to the pip. And then look at that, right? We're looking to maybe long it off that same frequency line. We might get stopped out. If we do, we might just, you know, look to long it again down here, right? And look at that. It's fantastic. It works up there, right? So then we break above that. So what do we expect? You know, resistance, resistance, resistance. We probably expect that to be the support, right? So if it comes back down, we probably want to buy it. And that's exactly what we do. And we probably would have got out just there. You know, we don't know at that point of time that it's going to go up there. But now that it did stop there, we probably expect that to be support. And that's exactly what it was. Support there. Okay, we got a little bit, we got stopped out, and so then we go back to the other, so the next support line, which was down here, and we would have looked to take it along there. And now the targets are sort of right up here, and there they are, to the pip, right? So now we've got that as support line, and that as support line. Where are we going to go? Well, it's right there. I mean, take a look at the frequency. I can keep walking through it, but take a look at this frequency. Imagine going long there. Imagine going, you know, long there, getting stopped out and going long again as it came back up. Imagine, you know, being able to get out there. Imagine knowing now if the market comes back up to this sort of, you know, 85 level or 83 level or so on the SPX, it's a nice short, and looking to sort of, you know, maybe target the 1804 area. I mean, look at that. That's almost 80 points off a weekly chart on the SPX. You know, there's not many people out there that can give you that type of information. Let's take a look at a daily. Like I said, a daily chart of the SPX. Now, we're focused in a bit more on that, but look at this, you know, that's where we're basically looking, you know, anything above that is to us oversold at the moment. So when it came back and touched that, imagine that being a short, right? And your stops could have been above here and it never sort of went above there, right? Now imagine we're back down here, and you know, you could put your stops down here and you could possibly long it right here. And if not, maybe take a look for a long down here, or maybe even take a look for a long down there. But basically, you know, we're going to give you a complete roadmap for the path ahead. So guys, it's Trader Is here again, and I hope that that has been useful to you guys, and that there's definitely some information there and some levels there and some direction on where those markets are going. But if you really want to get into this and you really want to know how to trade these lines, and you really want to get a complete, you know, cut through of where these markets are heading for the year ahead, then as I said, put your email in the box below this video, and that's what I'm going to give you. I'm basically going to go through each chart. I'm going to go through the Aussie dollar. I'm going to start off on the monthly charts and show you where that's heading. I'm going to go down to the weekly charts and basically show you exactly how I would have traded that. There's a lot more things that go on these charts that I'll be showing you, and then taking them off, so just so the chart looks clean at the end of the day. Right, I'm going to highlight specific areas. I'm going to basically show you exactly how I would trade those areas, where my entry would be, where my stop would be, where my targets would be, right? And it's not just for the Aussie dollar. I'm going to do it for the euro dollar. I'm going to do it for gold. I'm going to do it for, you know, the SPX. And if there's something else that you really need it on, is there something else that you want to see this to be done on, we can also look to see if we can accommodate that as well. So like I said, put your email address in the box down below and I'll get that over to you straight away. Until then, happy trading.